Good evening. Ira Epstein of Linn & Associates with your metals market wrap-up for this Wednesday, April 29th, 2020 at 3:30 p.m. Central Time. It's 3:30, so the trading is still open in the metals, but they've gone very quiet. Gold was down actually on the close, lower than this, about $6, $7. Silver was, I believe, around closer to the 1530 level. So these markets all picked up after we finished up with the conversation today from Fed Chair Powell. Now, you know, the Fed released its statement. For those of you that get my written commentary, I covered it in detail, what the Fed statement was, what the Fed Chair said. Then I looked at what the metals were doing after that, and the metals are looking at the Fed saying, I've got your back. And that's enough to have a 7-week high or so in a number of stock indices. This market saying, okay, factories are going to reopen. The Fed's got the back. The Fed called on Congress, and that's what they said very clearly. They've got to help the Fed with what they're doing, as well as the U.S. Treasury, which they assured us has plenty of cash to do so. And the Fed is staying right within its guidelines of doing all this. All good news. Even the energy market's up a little bit today. Not the nat gas, but everything else. We're going to see nat gas numbers, storage numbers in the morning, and I think after that the market will try to figure out what next to do. The bonds and notes, well, for early on, they were almost a full point higher in the bonds. You were 9 ticks higher in the notes. They're reversing course. They saw what they had to. They didn't get anything nerve-wracking. They're backing off as the other markets are continuing their path higher. In the gold, we're at 1729.50. The highest close we've recently had is 1736.20. As I pointed out to you, and I'm going to stick with it, there's just not a big break that I'm seeing in this market. We're up $6 for the week so far. I don't know what would cause it. That's the interesting part. With all this money being printed and about to be printed, the Fed's making it very known. If they have your market back, it's parlance for we will give you money. And that's what I think got the gold market attention. As we can see in the gold, and I want you to visualize this, you have a market that's starting with a pattern here and a line there. Try to imagine a triangle. And that's what this market is forming. And as we get into the apex of it, we'll see which way the market ultimately wants to bend. Does it bend to the point where it says, nah, the stock market and the economy's okay, I'll wait to see what's going to happen? The Fed made it very clear and said, fiscal policy right now, they're not paying attention to it. It's what we talked about here a month ago. The name of the game is get the patient well, and then you can go back and say, okay, U.S. economy, here's the other things we have to do. But if you're not well and you die on us, there's nothing to fix. That's what they're doing. So we'll see. There's a triangle formation right in front of you here. Learn to read them. We have that in our futures trading kit. You might want to get that today after this show. Go to our website under the free offerings. You can see this here. Lower highs, higher lows. You're coming in like that right now. Now we'll move underneath. 1704.10, that's a breakout to the downside. 1764.20, you reestablish the bull trend because that's the most recent high on the market. Where's the market sitting? How often, for those of you that are regular viewers, have you heard me say this line in the sand, that 18-day average is where the market likes to fight battles? That's exactly what's going on. But again, if you get under that 1704.10, you've kept the lower highs, lower lows, and then you're breaking down under everything, and that could carry you to lower prices. I mention it because it's the easier number to take out, and then wherever this Bollinger Band comes in could become the first support, so that could take you back into the 1650, 1680 level, because that number is jumping each day by about $10, as you can see. Some days even more than that as it gets up to the price level. We'll see what it does. Is there something to trade here? Well, that becomes the question. Next, momentum, pointing down. So momentum leads price typically. That's still pointing down. Bias is up, swing line is down. Then I go to the gold-silver ratio, and silver is starting to correct again, and the key is for it to get back under the 18-day average of closes. That would then say silver's getting stronger than gold. Right here, it's not proving to me anything. When we go to the silver chart, silver cannot throw out a buy signal right here. That doesn't mean it can't go higher. But let's assume it gets over 1563.50. You'd still have the lower low and then a higher high. Right here, the market is fighting with the who? The bears to keep control. And that's because the market's fighting literally against that 18-day average of closes. Now, we'll see who does that. To take away control from the bears, you've got to get over 1563.50, and it hasn't been an awful big correction. We came down, got into the 18-day average, and we have fought against it literally since the beginning of the month. You haven't gone anywhere. Let's assume it goes up. Bollinger top, 1631. Let's assume it breaks. 1471, Bollinger Band bottom. It's neutral right here. In the copper market, trying to come alive again. It had faded away, as we can see, from challenging that Bollinger Band. You got up to it back here in early April. Now you're fading. Is this enough to make us think that with the whole world picking up and gradually beginning that whatever the new norm is in factories, social life, and the like, that the base metals have based? I think so. So I think that back here, $2 copper was it. I'll be surprised if we see again in any time soon crude oil negative $35, $40. I don't think it'll be. Could it happen? Of course it could happen. I never thought that what happened would happen. By the way, China has hired lawyers, and I guess they're addressing the CME group on something about crude. I'm not privy to it, but it was on the news wires that they're not happy, I guess, about something. I don't think it's a letter of congratulations. When we take a look at where you're at now on the platinum, you've got higher lows, higher highs, right into the upper Bollinger Band. That's a sign. These automakers are going to be back. The market doesn't wait for the lines to push the button and they go. The market anticipates what will happen. Now, what we have to watch is palladium. About 85% of the world palladium is used in catalytic converters. So we want to see if this market can come alive too. It is not in a downtrend. It's in no trend. While the swing line is up, the bias is down and momentum is flat. There's nothing going on there. In the dollar index, it won't take much for this dollar index to turn down. All it needs to do is take out today's low. And then you'd have lower highs, lower low. Potential, I'm not saying it would go there, could be the lower Bollinger Band, and if that gave ground, then back over here. The resistance, you're seeing it 3 days in a row. You've been against the 18-day average fighting at that number. So that's where I'm seeing where these markets are. As you can see, the market's now starting to reopen, and it'll trade right into the close, but you've already seen the settlement prices on that. I want to remind you, our market research, and there's different levels of our research. The Linn writes on everything. They have a staff of writers that are great. They publish stories all day long. Fundamentals, option analysis, spread analysis, and futures analysis. I'm a futures guy, so I write my own letter, what I think the futures could do, what I think you should do. And then, as you know, I publish and put out newsletters that are video style. One in the morning, for my subscribers, that is, of my morning subscriber video, and typically one in the afternoon for the Spider ETF boys. And I've asked people which way they want me to go, and I'm getting a very mixed story. Would they like me to do one at 8:30, 9 in the morning for Spider ETFs, or one after the markets? So far, a lot of people like them after the market, and I get that. You know, soon people will go back to work. Do they really have time at 9 in the morning to look at all those videos? It might be easier in the evening or afternoon to do it. Anyway, you go. Take a look on our website. You'll see the free offers. You can call my staff. They can get you set up, by the way. Or you can go on my research area. If you're on our website into research, take a good hard look there. I think you'll see something you haven't seen at prices that are great. I'm Ira Epstein. You have a good day. I'll see you tomorrow.